All right, let's talk about the holy grail of investing, finding those stocks that go up 10, 20, or even 100 times. We call them multibaggers. But how do you actually find them? Well, this isn't about getting lucky or chasing hot tips. It's about a professional framework, a repeatable process for identifying companies with truly extraordinary potential. So let's get right into it. So where does this term even come from? The man himself, the legend, Peter Lynch. And it perfectly defines what we're hunting for. You know, a 2-bagger doubles your money. A 10-bagger, that's a tenfold return. This is the real engine for building serious wealth. And today, our job is to understand its DNA. But before we get too excited, let's ground ourselves in reality with some hard numbers. Only about 1 to 2% of all listed companies ever achieve this kind of mind-blowing growth. So let's be clear. Our goal isn't to predict the future. It's about probability stacking. It's about using a sharp framework to find the very few companies where the odds of massive success are stacked way, way in our favor.
So where on earth do we even start looking? Well, the first, and I mean the absolute most important filter, is the industry itself. We never look at a company in a vacuum. You have to start by finding entire sectors that have powerful structural forces. We call them tailwinds, pushing them forward.
And this quote from Peter Lynch just nails it. You can have the best, most efficient company in the world, but if it's in a dying industry, it's like trying to swim up a waterfall. It's just not going to work. We're looking for companies that are riding a massive wave, not fighting against the tide. So what do these waves look like today? Well, just look at the huge shifts happening all around us. Geopolitical stuff is boosting defense. The AI boom is creating an insane demand for semiconductors. The whole world is shifting to green energy. See? These are the kinds of fertile grounds where tomorrow's biggest winners are probably hiding right now. Okay, so you found that fertile ground. The sector's booming. But here's the thing. It's probably packed with dozens of different companies. So the big question becomes, how do we systematically sift through all of them to find the one potential champion in that group? And that question brings us to the absolute heart of our strategy. It's a disciplined 5-point quality checklist that we run on any company we're looking at. This is how we separate the truly spectacular businesses from all the other noise out there. These are the 5 pillars, and listen, every single one is non-negotiable. We're hunting for small companies with tons of room to grow. They've got to be powered by explosive earnings, protected by a strong competitive defense, and sitting on a rock-solid balance sheet. And then, we need the patience to let the magic of compounding do its work. Let's break down each one. First up, we focus on smaller companies. And the reason is just simple math. For a monster company like Apple to grow 10 times bigger, I mean, it's almost impossible to even imagine. But for a small, innovative company to go from, say, a $200 million company to a $2 billion one, look, it's not easy, but it is absolutely possible. This is where you find that exponential growth, often because these companies are still flying under the radar of the big Wall Street funds. This table shows you exactly where we're focusing our energy. You see, the microcap space can be a bit of a wild west, super high risk. And midcaps, often their best growth days are already behind them. But that small cap range, that right there is the sweet spot. That is the ideal multi-bagger hunting ground. It's the perfect balance of massive growth potential and just enough stability. All right, now let's talk about the engine, the thing that actually creates value. In the short term, stock prices can be totally irrational, right? They're driven by news, by hype, by fear. But over the long run, stock prices are slaves to one thing: earnings. A company's power to consistently grow its profits is the single biggest driver of its stock price over time, period. And hey, don't just take my word for it. This is a fundamental truth that Warren Buffett used to build his entire empire. If a company's profits keep going up and up and up, its stock price will, eventually, have no choice but to follow. It's basically the law of gravity for investing. And these are the specific numbers we are looking for. We're not interested in so-so growth. We demand explosive compounding growth. See how profit growth is higher than revenue? That tells you the company is getting more efficient. And those high returns on capital, that shows you the business is an exceptional cash-generating machine. Okay, so a company is growing profits like crazy. That's fantastic. But the next super critical question is, can it protect those profits? This brings us to maybe one of the most important concepts in all of investing, the economic moat. Just think of it like a real moat protecting a castle. It's a durable advantage that keeps competitors at bay. And these moats come in all sorts of flavors. It could be a unique technology protected by patents. It could be a brand like Apple that people are incredibly loyal to.
Or it could be high switching costs, like your bank, where it's just a huge pain for customers to leave. Without a strong moat, high profits are like blood in the water, and they will always attract sharks. Now, for a step that, honestly, most amateur investors just skip right over. But for professionals, it's absolutely crucial. A strong balance sheet is the company's survival kit. All that amazing growth is totally useless if the business is too fragile to survive a recession or some unexpected crisis. Financial resilience is completely non-negotiable for us.
I mean, just look at the difference here. It is night and day. A fragile company is drowning in debt. A resilient company, on the other hand, is funded by its own cash flow with very little debt. That debt-to-equity ratio, we want to see that below 0.5. This is the difference between a company that actually gets stronger in a crisis and one that risks going belly up.
So this last pillar isn't really about numbers, it's about psychology. It's about having patience. The incredible, magical force of compounding is what turns a good investment into a life-changing one. But it requires one key ingredient: time. Finding the perfect company is totally pointless if you just sell it too early and don't give that magic a chance to happen. And this timeline, this is a serious reality check. Real multi-baggers are not lottery tickets. They don't happen overnight. The truly life-altering returns, they come from holding these amazing businesses for years and often for decades. Honestly, sometimes the hardest part of the job is just having the discipline to sit on your hands and do nothing.
So you've done all the work. You've found a company that ticks all 5 of these boxes. You're done, right? Nope, not yet. Now comes the execution. And this part is what separates the amateurs from the pros. Finding a great company is only half the battle. You still have to buy it at a sensible price. You have to remember, even the greatest company on the planet can be a horrible investment if you pay too much for it. That's why we always insist on a margin of safety. It just means buying something for a price that's way below what we think it's actually worth. This protects us if we're wrong, and it supercharges our returns if we're right. It is the ultimate risk management tool.
Okay, let's pull all this together. What is the professional's edge? It's not some crystal ball. It's not a secret algorithm. It is a repeatable process, it's a disciplined framework, and it's having the right temperament. It's about finding that quality and then having the patience to wait for the rest of the market to finally recognize it too.
So this is the formula. It's simple, but trust me, it's not easy. You start with a great industry. You find a small company inside it that's growing profits like a weed. You make sure it's protected by a moat and has a fortress balance sheet. And then you apply patient capital. That right there is the blueprint.
So I'll leave you with this final thought. Take this framework, look at the world around you, and start asking these exact questions. Where are the big tailwinds? What industries are being totally transformed right now? The next generation of multi-baggers is out there. Your challenge and your opportunity is to apply this discipline to go out and find them. Thanks for your time.